What is going on, everyone? Welcome back to the channel. In this video, I want us to discuss HEX, its recent move down from 9 pennies to around 8 pennies, as well as the current fractal that we might be finding ourselves in that we've discussed extensively in depth on this channel. I want to revisit it now that we had a nice pullback. We can take a step back, look at this longer term fractal that, again, we've been looking at, some updates on it, a little bit more. So if you like this kind of hybrid technical and quantitative analysis on the HEX charts, leave a thumbs up, be subscribed by the end of the video if you aren't already, because we just hit 2,600 subscribers. Thank you guys so much. Let's get to 3,000 by the end of July, but first stop is 2,700, or by the beginning of July is what I meant. Let's go and talk about these charts. So recently we saw our pullback, clearly, and unlike these other pullbacks that were bought up super quickly, this one was bought up, right, from the low 7s, so 7.4 region, and currently bought up to the 7.9 region. So a nice little bounce. It is a red candle though, and we are down approximately, let's take a look, about 25%. And let's look at this dip over here, which was 32%. So we're used to these on our way to Saturn, right? We've seen way bigger dips during this rally. So this is absolutely peanuts compared to literally since the beginning of May all the way to now. We've seen a 33% dip from 3 pennies to 2 pennies. We've seen a 50% dip from 6.7 pennies to about 3.3 pennies. A 32% dip from, again, that 6.7 penny region to the 4.4 penny region. And currently we're within just a 25% dip. So we're used to it. If you're not used to these kind of dips, well, welcome to crypto. If you can't handle these kind of dips, maybe crypto isn't for you. Again, this is a very volatile market, so strap in. Now, we are actually really close to our 20 and our 21 day moving averages if you look at them here, and they actually converge with this nice horizontal support, which we saw as resistance for the longest time during the formation of this, you could argue, ascending triangle. And those regions are between the 6.4 and 6.7 penny region approximately. So I'd venture to guess that those would be very strong regions of support. Not saying we'll go down to those levels, right? For example, if you had been waiting for a retest of, say, this top, because remember we had like 30-something% dip. Well, we wicked it down to about 10% above it, but never actually reached it. So these regions, although they can provide some sort of insight into where we might see some buy pressure, remember that some people are trying to front run those levels and so might set their limit orders slightly higher, and then some people might be trying to front run those guys and set their limit orders slightly higher. So you have this kind of chess effect where people are thinking plenty of moves ahead and planning for if the other actor is thinking plenty of moves ahead, so you are that much more ahead. So that's my little bullish bias towards why, or my bullish argument for why prices sometimes don't always retest exact levels. And there are other reasons for it too, right? That's not the only one. I can think of a few, but just saying that this 6.4 to 6.7 penny level does look like strong support, not only because of the bullish formation it formed back here, but because of these moving averages that have historically held nice support during uptrends. Right, and whenever you dip beneath them, have presented historically good buying opportunities. For example, you could have scooped up some cheap HEX here, back here, back here. Every time we've been beneath it has been generally a good time to buy for the past, ever since the supply dynamics became solidified with our current inflation rate back here in November, right? Great time beneath it to buy, rallied above it. Buy beneath it, it rallies above it. So generally speaking, again, these have been great times to buy. So if it does dip beneath it, then you know my take on it. If it holds, then you also know my take on it. It's held strong support on uptrends. So if it holds, strong support. If it doesn't, generally a good time to buy. Not financial advice, your generic disclaimer for this video. But let's go ahead and talk about a little more than just the technical side of things. Let's pull up this CoinTrader Pro. I like this site. For one, because you can do 3-day charts, which is kind of nice. Not many people are looking at the 3-day chart. And because yeah, that's mainly the reason why. But I want to show you guys this moving average channel that I've never talked about. It's a 20-day moving average channel. I don't know the ins and outs of it. All I do know is what I see here for this chart. So take everything I say with a grain of salt. I'm still learning, as are you. But I did see a pattern here, which is really all I want to talk about. And that's this over here. When we saw our capitulation in March, we had a candle, not actually closed beneath it, but it did break beneath it. And then our other candle here had a nice wick beneath it. And that was the local bottom. And this is the 3-day chart, right? So this moving average channel, even though it's on the 20 period, it's actually like a 60-day multiplied by 3. So it's a 60-day moving average channel, more or less. And back here you saw that this happened, and the reason I'm pointing that out is because it also happened over here, where we had a red candle break beneath, and then another candle actually closed beneath, unlike this one, but a long wick down, marking this sort of capitulation local bottom area. And then what happened next is we rallied. How much? How much did we rally? I want to show you guys. If you look at this, and we'll get to the fractal soon that I promised. So we rallied approximately 47x. So this is one angle of looking at the fractal that I just mentioned, right? If you take a 47x move without considering time for a bit here, approximately 30-cent hex is in the cards. If we do similar break beneath the moving average channel with a nice wick, and then a 47 to 50x move up, would have hex sitting at around 30 cents. And when this move started, price didn't break through the moving average channel and beneath it until we'd already formed our top. And notice that we haven't broken beneath it. Like, we came back into it, but we haven't broken beneath it, which makes me think this might not have been our top. This might not have been our top. I think there's still room to grow, especially based on this angle of looking at things, right? This bottom to top fractal. And if you look at the top to the top, right, a local peak to a local peak, this is kind of interesting as well. So our 30-cent target for this fractal playing out, now what if it played out a bit differently and you look rather at top levels? So it seems like there was resistance around this region, right? And we effectively, from this region of resistance to the local top, did more or less a little over a 10x, right? If you take it just to the candles, then you can say, okay, maybe around 11x or so, if you're being conservative. Let's say 11x. Now, clearly, this region over here was our, you could say, our analogous region, where we came up to it, held it as resistance for a few times, here once, twice, 3 times, held it as support, and then blasted through here once, twice. You could argue 3-ish times over here, or over here I should say, and then we held it as support before blasting off. And so it was approximately, again, a 10 to 12x move from the top to the top. So that's another way of looking at this, to say, okay, what if it's another similar move? Then a 10x move would be, about 14 cents. And then an 11x move would be around 16 cents. So approximately 30 cents for our previous target. This target says something closer to like the 15-cent region, but it makes sense because it's approximately 10x above this region. You could even argue, we've seen it wick up to like 2 cents here, I think, on some charts. So you could argue for the 20 cent. So 15 to 30 cents seems to be our target with this fractal, this pattern that we've been looking at. We're going to revisit the fractal from the angle we've been looking at shortly. Before looking at but first let's look at the HEX BTC chart. I mean, this looks insane. Like, wanted to point this out. So we obviously had our market structure, and then when we had our expansion phase on the HEX BTC pair over here in April, this pretty much became super small comparatively, right? And the tops of these, again, were approximately 10x lower than this top over here. So similar, about a 10x move. And look at where we are now. Just absolutely insane price movement, sitting at around 213 Satoshis. So if you argue maybe we go about around 10x above these previous tops, which were around, 70 to 110 Satoshis. So let's say 100 Satoshis. 10x above that would be 1,000 Satoshis all the way around up here, which in retrospect we've seen previous market structure become basically a flat area in retrospect, even on a log chart when you see the move that plays out subsequently. Just similar to over here where this move just completely eclipsed this price structure back here because it was a 10x move above previous all-time highs. So a 10x move above previous all-time highs would put us at 1,000 Satoshis. That would be a milestone, to say the least. Huge milestone. It'd be approximately a 5x from here. So if price of Bitcoin stays stable, it would correspond to like 40-cent HEX. If price of Bitcoin dumps, all the way to, 14K, and it would correspond to 14 cents. So we'll see how these markets play out. Interestingly enough, I did want to point out this pattern that I actually just noticed where you have a nice move on the HEX BTC pair, followed by some clear consolidation, bullish consolidation, because it was, holding support on the previous all-time highs with long ass wicks beneath it. Super nice. And then nice move up, bounced off of the moving average channel, came back down to retest previous highs on this bull flag, you could call it, and convergence of support with the top of this channel. Nice consolidation, move up, and it looks like we're in a nice consolidation move. So could we see something similar to over here? Maybe, where this move up is analogous to this move up, and this consolidation region is analogous to this consolidation region. Maybe it allows the moving average channel to catch up a little bit, the top of it, the bottom to move up. We see some consolidation around here before another leg up. I mean, the trend is your friend, and if you just go based on what's happened recently, then something like this wouldn't be out of the cards on our way to 1,000 Satoshis perhaps. Let me know what you think in the comments below for that. But now the part you've been waiting for, which is the fractal, right? And here it is. Updated. We haven't talked about this in probably weeks because prices started getting heated and we got really into our 7-cent HEX, 8-cent HEX, now what? Those kind of videos. But if we look at this, which again we've been looking at previously with our nice cup, our handle, with the first fractal back in 2020, we saw that it consolidated quite nicely around here before blasting off very quickly, whereas it was sort of a fake out this time around where we actually dumped one more time, came above it and formed a larger market structure and support, whereas here was pretty quick consolidation, support, boom. Here it was long and drawn out move up, long and drawn out, finding support finally on this region of ROI on this fractal before moving up. And remember, we had said that this was a similar stopping point during the last fractal where we found consolidation, and the argument was, well, this move is drawn out longer, it's taking longer, as we saw based on this, right? Where our breakout on the first fractal was on day 123, and our breakout on the second fractal was on day 177. So what's 123? Everyone, we've probably done this before, but 123, 177. So it's 69%. So it's playing out approximately 70% the speed, right? At 70% the speed. So slower. Much slower. Well, not much slower, but significantly, like non-trivially slower. And once again, my argument was, well, what if we form some sort of bullish structure around this level and then have our final leg up, which takes us another 2 to 3x, right? And we have formed bullish structure around this level, which is our clear as day ascending triangle, broken above it. And so the argument now is, well, what if we see our subsequent 2 to 3x move up? And if that was the case, then we would be looking at, again, anywhere from 13 to 20 cents ish, which would put this level closer to over here. And just because we're long and drawn out, it doesn't, like, lengthening cycles are they're oftentimes bunched together with diminishing returns, but I think it's slightly different with HEX, and I'll explain why. Because, like I've said, supply dynamics are different. So even though these moves might take longer to play out, just because we have so much less sell pressure than we did in the first year, I think diminishing returns might not be as heavy, right? Which is why I'm saying, like, okay, well, we might still be able to reach this level, and it's trading on an automated market maker. Liquidity isn't super high as with other coins, so it just makes sense, right? Fundamentally speaking, that, and it's just 1.5 years old. Like, I really, really am a strong proponent of the idea that we won't see diminishing returns on most of our models until maybe 2 years, 3 years into the actual lifetime of the coin. So maybe next year we start seeing some hints. And to be fair, we've seen hints. For example, when we refit our regression rainbow in yesterday's video, we saw that the angle actually tilted by about 5%. So I don't think we'll start seeing huge diminishing returns play out in the data. You know, like 5% isn't massive. It's hinting at it, but I don't think we'll start seeing actual insane, like, diminishing returns until 2-3 years. Could be wrong. I really could be, but that's just my take on the market. So I do think we do have room to move up. I do think so, and that would again put us around the 13 to 20 cent region for a nice local top, maybe. But obviously, pulse chain coming in changes things a little bit in terms of when the market is going to do what. So we'll just have to keep you updated, and I'll be here every step of the way. So if you go to LookIntoHex.com, we updated our models yesterday, like I told you about. The chat, someone posted in the chat, I just responded. They posted May 9th, but I noticed because someone else posted recently, actually just like yesterday, I believe. The rise of the hexagon. It was a pretty good read. I responded. They showed the video. So yeah, just for those of you who are new and didn't know, there's on the website LookIntoHex.com, you have your charts tab. You have, you know, your 4 charts. We might add more. You have your videos tab, which are just recent significant YouTube videos, funnels back to my channel. And then you have your chat tab, which is just another place to discuss. Obviously, the Telegram channels are popping the most. So I wouldn't expect you guys to, you know, migrate all of that over here. Definitely makes sense to keep all of the thought power in one spot. So keep it over there. But for here, it's mainly stuff regarding maybe to the website, like updates, just another spot to chat, right? And then you have your, obviously, your socials and your buy hex, which takes you straight to 1inch DEX aggregator with your ETH hex pair ready to rock. So yeah, that's pretty much it. I think that's all I wanted to cover in this channel. We covered the website, we covered the Fractal, we covered our HEX BTC pair. Maybe we'll cover our HEX ETH pair in the next video. Yeah, check out the website. Very cool. Updates every single day. I'm really proud of it, to be honest. I think the heat maps page looks much better than it did. More relevant data, and plus this new interactive, you know, risk metric, so to speak. We might relabel it that. But yeah, with that said, appreciate you watching the video. Leave a thumbs up if you enjoy this kind of hybrid quantitative and technical analysis on the HEX charts. And be subscribed. Let's get to 2,700 subscribers next. Comment down below what your thoughts are on these fractals, on the HEX BTC pair, you know, on the heat map, the risk metric, all of that. So again, I'll catch you in the next video. Peace.